What's up? Coach B here with another episode of Chalk Talks. I started this series to break down and explain market terminology, options, trading basics, really anything. So if you have something you want me to cover, put it below in the comments. If you're just coming across this video for the first time and interested about learning options, please check the Chalk Talks playlist on my channel to find the videos that lead up to this discussion. Otherwise, some of this stuff may not make sense. So today's video is a follow-up of the last one. In the last video, we talked about historical and implied volatility, along with how volatility can affect the price of a contract. Today, we're going to take it a step further and talk about how you can use IV, implied volatility, to see where the market thinks the stock is going to go. Keep in mind, this is only theoretical, but this is essentially what the implied volatility is all about. So, if a stock's IV is at 50%, basically that means that the market is implying it will move 50% in the next year. Keep in mind that could be up or down. So let's say a stock is trading at $100. With an IV of 50%, the market is implying that in a year it will be trading between $50 and $150. That's 50% up or 50% down from the current stock price. So, without getting too much into statistics and standard deviations, the theory is it should be within that range 68% of the time. So, again, let's say we got a $100 stock with an IV of 40%. It should end the year within a range of $60, which is 40% lower, or $140, which is 40% higher. That's a 40% move in either direction. So between $60 and $140, 68% of the time. So let's look at some option chains and see if this makes sense. So you guys know I love using Disney as an example. And although there's not exactly a year out from today, we're recording this video on August 18th. We'll go down to June. Okay, so that's pretty close. It's about 10 months from today. Let's check it out and see where the market is implying this stock should be. So implied volatility right now, and again, every option chain is going to be different and how it looks on your broker's platform, but it's showing that implied volatility for Disney right now, DIS, is 27%. Okay, and so that's basically saying the market thinks the stock will move up or down 27% by next year. The current price of the stock we could find up here is $174.74. Now, I'm not going to attempt to do this math in my head, so let me pull my calculator up. Okay, so $174.74 plus 27%. It's $47 roughly. So $221.91. So basically $222 on the high end. And then on the low end, we'd be looking at $174.74 minus 27%. Basically $127.50. So in theory, again, this is just theoretical, there's a 68% chance that this stock should be trading between $127.50 and $222 a year from now. Is this always accurate? Absolutely not. If there's a 68% chance it lands between there, that means there's a 32% chance it doesn't, right? 16% that it's higher than 222, and then 16% that it's going to be lower than 127.50. Now, that's something to consider before buying, extremely out of the money calls or puts. You can kind of, look and see, okay, where's the market implying this? All right, well, I know I got a 68% chance that it's going to be in here. So you can kind of use it before, to make more informed decisions. But again, it's not always accurate. It's theoretical. It's what the market's implying. Okay, so let's see here. Before we move on, I want to point out something that before it even gets asked in the comments. It was one of the questions that I thought when I first heard about this. What if the IV on a stock is above 100%, right? How does it work to the downside? I mean, a stock can't lose more than 100%. So if an IV on a stock is 140, obviously, let's say stock's trading for $100 plus 140%, it's gonna be trading at what, 240 on the upside, but there is no downside. You're absolutely right. if you're thinking that. Basically, these are quick calculations to give you a rough estimate. And I don't want to get too much into stats, but basically it comes down to like normal and log distributions. And there's other formulas for figuring it out, which kind of brings me to my next point, which is the probability calculator. Okay. So now that you know where a stock is implied to move in a year, how do you figure out short dated options, right? Like I could look and say, okay, Disney is 27% IV. That means they're implying that within a year it's going to move 27%. Well, how much is it going to move in 6 months? What's the market implying that it's going to do in 3 weeks or something along those lines? So, or how do you figure out what's going to happen with an option that has more than 100% IV? What's it saying to the downside? Well, there's a lot of free websites out there, and there's also like tools inside your brokerage app that kind of do this for you too. One that I found that's pretty easy to use is on optionsstrategist.com, and I'll throw the link below. But let me just show you guys how it works. So again, there's tons of websites out there, and this is just one of them. But the way this site works, you can plug in the numbers from the option chain along with the strike price you're looking for, and it will give you the probabilities based on the current IV. So again, we got the Disney chain pulled up. Let's take Disney for an example. So we just did June. That's about a year out. Let's say we wanted to go 30 days out. Right here it shows that that's September 17th. So what I'm going to do is I'm going to come in here. It doesn't even care what the stock ticker is because it's all math, right? So I'm going to put 174.74. That's our stock price right now. Let me move this up too. Okay. And target price. So now we got to pick a strike. It wants us to tell it what strike we want, and then it'll give us the probability. So I'm going to just say 180. Okay. Calendar days remaining, 30 days. We could see that right here. So I'm going to put 30 in there, and then percent of volatility. So what's our IV? We said on Disney it was 27%. So now I'm going to calculate it, and you could see here that it's giving me this. Let's see if I can zoom that in. It's giving me a probability that the stock being above the target price of 180 is 35% chance. Being below there, 64.9% chance, which kind of makes sense, right? I mean, if the stock is only going to move 27% over the next 365 days, it's probably not going to move. It should, in theory, not move that much in the next 30 days, right? It should be based somewhat off of that. So let's go out a little bit further now. Let's say we go out to November 19th. That's now 93 days. 174, 180 strike price. All I'm going to do now is just change the calendar days remaining, which is 93. Okay. And volatility is the same. Calculate it. All right. Well, now I have a 41% chance that I'll be trading above 180 and a 58% chance that I'll be trading below. Again, this is all probability. It's all theoretical. It doesn't necessarily mean that that's what's going to happen. If we continue to go out in the strike price and we go, let's say all the way out to March now, 212 days from now. And now the only thing we're going to change is the amount of days. It's giving us a 44% chance that we're going to trade above the 180 strike price. All right. So that's how it works. I mean, and that's with the 27% IV. If you were to go plug in some other stocks on there, it's going to come out a little bit different, and obviously, again, implied volatility is how volatile the stock is. Disney has a 27% IV. That's pretty damn low. You get into a stock that's got a 60% IV, that means it's going to move a little bit more. 100% IV is going to be moving even more than that. But again, the higher the IV, the more expensive the contracts are going to be. Why? Because the market thinks that the stock is going to move more. I hope that all makes sense. Now you should know kind of what IV is and maybe have a sense as to determining where the market thinks a stock may be headed, along with how to figure out how probable your contracts are going to, be to print. So anyways, if you're enjoying the content, please hit the like and subscribe button. If you have questions or ideas for future topics, please leave them below in the comments. Also, I stream live every morning the market's open. Usually start, basically during pre-market. I don't even like saying the time anymore. I used to say a half hour before the market opens, but lately I've been getting on a little bit earlier. So basically come catch me in pre-market. I'm streaming every morning. Basically between 5 a.m. and 6 a.m. is when I get started. And that's on the West Coast. All right. That's Talking Stocks with Coach B. Come check it out. Have a good evening.